Shadim Shari. Good morning. It's Friday, 9/27, 2024. For some silly reason, I thought this week is the end of the month, but we have one more day next week, next Monday. Technically, today is not the last trading day of the month. That's okay, but it's Friday, so who knows? It can go crazy. It might not, but it can. First up on this sector, consumer staples, Philip Morris. All these stocks have been running super hot, but they have been cooling off. Look at that. They were running super hot, and I'm sure is the market, the overall market with the S&P 500, the Nasdaq, Dow Jones, small cap rise the past week or two, they cool off. Not a surprise, okay? Not a surprise because rotation. Money has been going into Philip Morris, Altria, I mean. It's been a hot stock for sure. But look at this thing. You're talking, you know, I mean, on the grand scheme of thing, yeah, it's up a good 20% plus over the past, 6 months, but it has retraced it quite a bit. It has given up 8% or so, okay, from the high. Would I buy? Uh, no rush, okay, no rush. Now, if there's a crazy reason where it come down to the 200 MA, yeah, but to me, it would be interesting. Like I'm gonna put it's a gap fill right here. Wow, it filled the gap already, so that's not really, yeah. To me, it's nothing all that interesting. Okay, nothing. If you want to do a fib, you can do a fib. You can see that I don't trade this much at all. In fact, I can't recall the last time. I think the last time I traded this stock, to be honest, was 2018. Yes, you had to go way back to 2018, December or November of 2018 for me to remember that I did something with this stock. I think been so long. 54.95. There you go. Yeah, it's nothing significant of any sort. Okay, so yeah, for me, if I see it touching the 100, it will bring attention, but way down there. I'm sure if I look at Philip Morris, same thing. Yeah, there's nothing here. Okay, nothing here. Sure, broke the 20. You gotta come down to at least 100 for me to be interested in it, but for sure, 200 MA. Now Costco bouncing on the top range. Okay, definitely is no touch here. Okay, no touch. You can see this purple line. It has been touching, trying to break through. Let's go back 3 years, see what that line is. Yeah, it's a long-term trend. Yeah, it's way too hot. Hey, but if you have it, if you bought on the dip, congratulations. It did go through a boring year, right? And then if you held on to it, you got the big reward, right? It's a big, you're talking big, from like mid 500 to 900. Come on. Impressive. Okay. When you look at something that gives you 85% plus return for a big cap over 1 year return, wow. Wow, right? Wow. Um, what is Sprout? Is that Sprout? Yeah. Wow. Another one. Grocery store. Impressive. Impressive. Okay. It's All I gotta say is, hey, if you have it, congratulations. Uh, at this point, it is rare air, right? And if you want to do a fib extension, you can do one here. So let's do a fib extension, see where potentially where it can go next. Fib extension, and the extension go right here. Okay, because that was a high, and then it test again, and then the breakout. So let's do it right there. Okay, so next up is 113.55 is a potential next fib. Wow, right? But yeah, if you have it, draw yourself a fib to see where it's going. Pretty crazy. Like the consumer staples have been going very strong. Okay, very strong. But they have, for some, they have retraced it. Look at like Colgate. Let's see. Does this look similar to Altria and Philip Morris? Yes, they had a great run until Labor Day, and since Labor Day, they're all kind of like get back. Now Colgate, same thing here. For me to be mildly interest would have to be at least the 100. The 200 is far, far, far away. Okay, far, 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 far away. But give or take 10%, right? I don't know the reason for it to come down, but for now, it's a no touch. But let's go back 3 years to see what it looked like. Yeah, look at this thing. Smoking. Look at this thing. Yeah. Yes, it's you're talking 30% gain, okay? 30-40% gain, but still, that's impressive. Is it? No, it's more like I take it back. It's more like from the low, it's more like almost 50%. Yeah. Guess when the low was? Going back to a year. October. Yeah. See, look, remember I talked about how tax loss does not necessarily happen until the end of October. It can start in early September. It can end for some company. It could end sometime in September. All right. It's the order to do tax loss harvesting come out Labor Day. After Labor Day, I'm sure if you work on Wall Street, there will be discussion bring up about tax loss harvesting after you return from Labor Day weekend. And look, it stopped. Ref low, right? TA wise, don't ignore the obvious. Who would have thought? Who would have thought last October that buying something as boring as Colgate would get you 50% return? It's insane. It's insane, but it's not insane. Okay, this is why I harp on tax loss harvesting watch starting in September. I'm like, keep your eyes out. Look for stock that is bottoming, forming bottom, reach bottom, bouncing at the bottom, and buy some. You will be rewarded. Okay, it's is it 100% guarantee? Nothing is 100%. Nothing. But the odds is high. Kellogg, pretty much the same thing, right? We talk about this. Look at last October. Ugly. Ugly. But if you bought it, sure, take out this uh, buyout nonsense, okay? Whoever it is that bought this, paid this, I can't remember, but it doesn't matter. But if you bought Kellogg, boring Kellogg, you have your many chances to buy below 50. right? And you could easily make 20, 25%. For sure, 10% by Christmas. Procter Gamble. Look at this thing. Wow. Boring Procter & Gamble. Same thing here. You know, you buy October low. Look at that, right? Solid, solid return. But right now, there's nothing compelling to chase into. You know, they all have retrace, but they got a way to. All of them need to retrace 5% to 10% for me to be interested in them. Right. The one that I have been nibbling, Hormel. Yes, yes, Hormel. It's in the gray zone. So yes, okay. I start to like Hormel down here. Those that remember, okay. I start to talk about Hormel a lot. Spam me spam down here on this turn, on this breakout, okay. Spam me spam. Well, I talk about Hormel all year, here and there, okay. I like, this was not drawn in here, but the last time I got into Hormel was here, and then I got out somewhere up there, okay. And I missed this one. This big dip here was too much, too fast, and then but now I'm back. Would I buy more? Yes, I sold naked put 30. Not a hard decision to do. Okay, is there tax loss harvesting? Possibly. They all depend on who paid up here, who paid 10%, 20% higher. Okay, that's the kind of number that tax loss harvesting does not really, you know, if you look at the stock that maybe down 10% from the high of the year going into September, it's really not. Even 15% is not really a good candidate because most hedge fund, big portfolio, big mutual funds, they own a lot of stocks in the hundreds. And I'm sure they have stocks in there that lost 25%, 30%, 40%. So when you look at something that potentially can be a tax loss harvesting candidate, it has to be 20% or more. Okay, anything that's less than 20%, not really prime. It can happen, but it's not prime because I'm sure they have bigger losses to harvest. Hormel, I like. Okay, Kraft, uh, not all that compelling, but definitely a bargain compared to the Procter Gamble of the world. Okay, yeah, nothing compelling here to buy. General Mills, same thing here. Ran too hot. Common theme with many consumer staples, as you can see. Outside of Hormel, what's out there to buy? Not much really. Many of them have run way too hard and is either retracing, giving up 5% here and there, consolidating. But yeah, they have been hot up until Labor Day, and now they have been going sideways or retracing since Labor Day, and they will both keep on watch. The big losers, that is. That's it for today. I can run through a lot more consumer staples there, but I'm sure you get the same kind of looking chart. The sector has been hot. Money has been rotating into them, anticipating a recession. It has been a quiet run. Nobody talk about them. The focus on the market has always been on growth, max 7, and there is no growth in consumer staples. Well, there is. I'm gonna say, for the most part, there is really little growth. compared to other areas, so they don't get the love. But as you can see, many of the stock got a lot of love, lots of love the past 3 weeks. All right, people,